Welcome, everyone. Thanks for joining us for our Thursday, the 25th happy hour. Let me see here. While everybody's coming in, do you mind putting where you're from and where you're tuning in from? I'm going to pull up my chat here. Got people from all over. We're here in Sarasota, Florida. I'm going to just give a little housekeeping as everybody's checking in. This is supposed to be real informal. Like there is no selling, there's no like hooks on it. It's just educational purpose. And what we want to do is just bring value. So at any time someone feels like they have a question, like please come off mute and ask your question. We want to make everybody feel as comfortable as
Hello.
possible. Everyone coming in? All right. We have a special treat for you. We've got Roberta here, and she specializes in self-directed IRAs, and she's created her own company where she brings clarity and confidence when coming to choose the right self-directed IRA company. So I'm personally going to be learning along with you as we go through this little happy hour. So Roberta, please introduce yourself.
Great. Hi, everyone. My name is Roberta Hudy Valentine, and I'm actually located in Cleveland, Ohio, outside on the west side of Cleveland. Those of you that know Ohio, I'm probably in one of the more favorable spots because we have the Lake Erie Islands very close by. So I like to think that I'm a coastal city. So a little background there. So I didn't know how much you want me to say right now, but I'm looking
No, that's
forward
great.
to getting to know you in this call. And like Rebecca said, we're looking to educate and bring value to you as an investor, whether you're new, seasoned, maybe you're getting started and you're feeling like you're fumbling a little bit with self-directed IRAs. I just want you to know you're not alone because a lot of people go through that. So, and if you're looking to leverage a self-directed IRA, maybe in a more creative way, we'd love to talk about that as well. So, again, Roberta Hudy Valentine, my background, not only as a small business owner, entrepreneur, definitely at heart. That's where as Rebecca said, I am in my own consultancy with InvestIRA, and I work with investors that want to get that clarity, confidence, and velocity, not only to the education process of self-directed IRAs, but also to the actual execution, right, of the self-directed IRA transaction itself. So we'll talk more about that. And of course, we'll let you lead the way here, Rebecca.
All right, wonderful. And I just wanted to bring in my co-host, Lena Sells. Maybe some of you have spoken to her. Lena, why don't you introduce yourself for a minute?
Absolutely. Hi, Rebecca. Hi, Roberta.
Dana.
Thank you so much for coming to our happy hour, Roberta. We're looking forward to hearing what you have for us. I know that most of the people are very familiar with self-directed IRAs and what you can do, but I think you can bring us some things that I think a lot of folks are not familiar with, how we can better set up and how we can better invest. So we're really excited to have you.
Awesome. Thanks, Lena. We're going to go to we got little slides here to keep us on track because you know how women are. We kind of start talking and we go down a rabbit hole. So we're going to try to stay on point here. So the first thing is pain points. And, Roberta, like chime in here. Like, I'm sure for me, new in the whole self-directed IRA, like, we've got some pain points here that we're seeing current investors are going through. The first one feeling overwhelmed by the choice, confusions about the fees, uncertainties about the performance and the custodians and the process risk. You want to touch a little bit on this?
Sure, absolutely. So I was actually trained in the industry as a self-directed IRA expert with Equity Trust Company, which is, I think they're again back on top as the largest and the pioneer in the self-directed IRA industry. And I mention that because I would travel the country, and 80% of the time I'm out there talking to investor groups, maybe 5 people, 10 people, up to hundreds of people, and educating on how to use a self-directed IRA. And I think
Chris,
that
hörst du mich?
it's some great information out there and lots of information coming from custodians and administrators and trying to simplify or, give you direction and why they're the best company. So being overwhelmed by not only sometimes the investment choice, but by the custodian and where I'm actually going to hold that account. And I think simply people are overwhelmed because there's so many, number one. Number two, more recently, especially with the acceleration of chat and AI and all these things going on, we know we can go in there, right? Go online and say, who's the best? And have it spit out all this information. But does it really customize or address you individually as an investor and what kind of things you're looking for in terms of a service provider? So now that I'm an advocate for investors, I'm really not bound by the no tax legal investment advice sitting in that chair, wanting you to open an account. We're able to talk really about those challenges and choices. And I think sometimes analysis paralysis, we hear it a lot, not only in our personal lives, maybe choosing what to wear, but what to invest in or who to work with in terms of our investment team. So there's a lot out there. So I think that's part of the choice problem or dilemma that we have. Fees is a big one. A lot of times people say simplified fees, and what does that really mean? Because you might have a low application fee, and then you open the account and you didn't read the fine print, right? So you didn't know about the wire fee. You didn't know about the ACH fee. You didn't know about the investment direction fee. So there's a lot of different fees. Again, that's really important to navigate, but do you really want to comb through, 30 or 40 of them? No. How do you whittle it down, if you will, down to maybe 5 choices or 3 choices? So that's what I help you do. Again, not based on the custodian and all the bells and whistles, but based on you. What type of investing are you going to be doing? Are you a note investor? Do you do private lending? Or are you looking to just leverage a Roth IRA? I want to get some tax-free income and I'm looking to do a single investment. So very different conversations with the individual investor. So the customization, I think, is important. Uncertain performance, that's a big. I, again, have talked with hundreds, if not thousands of investors over the years.
Wait. Who's always talking here? Sorry to interrupt you, but someone is like shouting names in here. I just wanted to.
Thank you. Thank you.
Yep, I'm not sure. I'm going to let you navigate that, Rebecca.
I've got it. Thank you.
Okay. So performance. So talking with investors, often I hear that, I was on an event with my self-directed IRA company. Of course, they don't give any investment legal advice, but they introduce me to opportunities, or I'm on their investors platform. They have things for me to choose from. And they think that because it's coming from the custodian, that it's going to be a good performer, right? And it's the wrong assumption is all I want to say there, right? Because they can't tell you anything about performance. They can only tell you about feasibility. Can I put it inside of the IRA or not? So we can dig more into that topic if anyone has specific concerns about due diligence. I think it is the one area that even sophisticated investors, honestly, Rebecca, I've seen they just didn't ask the questions and they play the money and they follow the herd and they get excited, but they didn't really find out how it was secured.
Roberta, let me ask our audience, how many of you have self-directed IRAs? And I know we don't have a bunch of people here, so y'all feel free to talk.
Yeah, chime in or put it in the chat, whatever you're comfortable with. How many individuals on here have self-directed IRAs?
I know Lynn does.
Using them, currently using them?
I have one.
Okay. We've got somebody. Excellent.
My older brother has one. I have 0.
Okay.
Is there anybody here on the call that is completely new to self-directed IRA and doesn't really even know what I'm talking about?
Yeah, kind of me. I just wanted to kind of step into the footprint of my family because Ja, wo viel Geindl, Digga. Wo viel Geindl. Scheiße.
So maybe I can run through the basics too, Rebecca, on
Okay.
self-directed IRAs. So everybody knows what we're talking about. In this conversation, here's what we're talking about. A self-directed IRA is regulated by the IRS and the Department of Labor, and it is like any other IRA that you would hold right now. So a 401k, like an employer-sponsored plan, a Roth IRA, or a traditional IRA. Some of you may have health savings accounts or college education savings accounts. Those are all IRAs. Self-directed in the conversation we're having today simply means that you hold this IRA with a custodian that allows you to decide how you're going to invest. You choose the investment. So it's anything that is not correlated to the stock market, technically. ETFs, bonds, stocks, mutual funds, those things. So as far as the rules, the contribution limits and the distribution rules involved, exactly the same as one that you would have with a Schwab or a TD. I think TD got acquired. I go to say that. Wells Fargo, Schwab, any of the big ones, exactly the same, except you are choosing the investment. So most people, I'd still say probably a good 60 to 70% of self-directed IRAs are being used in real estate. Okay.
That's really interesting.
So yeah, that's still pretty high. The pioneering of this industry, a self-directed IRA, actually got started back in the 80s. Equity Trust Company that I mentioned earlier, they were the pioneer right out of Ohio, around the corner from where I live. They are the ones that really got this started, but you've been able to do this ever since IRAs were created. It's just nobody knew about it, right? There's very few things that you cannot invest in with your IRA, and it's mainly collectibles, life insurance, or any prohibited transactions. So we can go into those, but basically you're prohibited to the IRA doesn't mean that you can't hold a piece of real estate in your IRA. You just can't live in the house that's in your IRA. No self-dealing, no sweat equity. It's really important when you think about a self-directed IRA is there's just 3 ways to fund it. So again, you've got to move the money from, I'm going to use Charles Schwab in this example, or Fidelity. You have the money at Fidelity. You want to invest in a private fund that's not in the stock market. You have to move a portion of that money over from Fidelity to the new self-directed IRA custodian in order to invest in the private investment. It's not that it's not legal, it's just that Fidelity doesn't do it, right? They only do electronically traded funds. So you move this money over to a self-directed IRA, Equity Trust Company, IRA Club. There's a lot of them out there. So when you open that account, 3 ways to fund. One, it's called an in-kind transfer. So you're going to move Roth money to your Roth account. You're going to move traditional money to a traditional account. It's called an in-kind transfer. That is a non-taxable event. It does not leave the protection of the IRA. The second way to fund is to do a contribution. So you can do a contribution to the account subject to the annual contribution limit of that individual account for a traditional or a Roth. Okay. So you'd be subject to that. Write a check, contribute. Thirdly, you can do what's called a rollover, and that's of a former employer-sponsored plan, including 401ks, TSPs, pensions, things of that nature. And I always suggest that you always do a direct rollover, so it never leaves the IRA. Don't receive a check. You can do it, but it's not the most seamless. You want to do a direct rollover. And you can take that old 401k, roll it over into your new self-directed IRA account. And then from there, you're going to invest into that private investment, private equity, real estate, private loan.
Roberta, how long does that process usually take? Like typically, I know all different self-directed IRA companies are different, but what is like the typical process? It sounds like a lot of steps.
It can be a bit much, but it is a pretty simple process in terms of opening the account, funding the account, and then directing the investment. The clunky part is a lot of times that transfer process, depending where your funds are coming from, the contra firm or the Fidelity in the example that I gave, Fidelity is actually one of the good ones that I recall. Sometimes that transfer, so if you're doing the transfer in kind, it's pretty quick. It can be anywhere from like 3 to 10 business days. I would say that they tend to be quicker. If you're doing a rollover of a former employer plan, that's where you can get into a gray area or even into the abyss, and that can take up to 30 days. And there's different reasons for that, along with TSPs and pensions, because there's administrators on the other end that you've never dealt with before, right? You were just dealing with your employer, but now we're dealing with another custodian or administrator of those accounts. And that's something that I do in my business where I walk through these processes and concierge people through that process. But that can take anywhere from a rollover can be anywhere from 10 business days. Like I said, I've seen a month or more.
Okay. Okay. Wow. Does anybody have any thoughts or questions on the information that Roberta's given us so far? Anybody have any comments? Feel free. You can get off mic and just ask your question.
I would just offer that I've been with Equity Trust for about 10 years and I found them always very helpful.
Good. Good. That's great to hear. They're a very big company now, Paul. And if you've been there 10 years, I believe you said, they've grown a lot. But they also have an institutional side to their company too. So in other words, retail, like investors like you and I that would just do a single investment, and then they have a servicing area and an in-house brokerage. And they, like I said, they're the pioneers. I think they're up to about close to 70 billion with a B of assets under management. And I do hear good things. I hear mixed things too, from different custodians, including Equity Trust. But a lot of times it's because you're new and or let's say you do a direction of investment and you're doing a private loan, and there's something in that investment document that isn't, I want to say maybe even there's like a space that's blank, or there's different dates within the document, or like the I isn't dotted or the T isn't crossed. They will push back and deny the investment. And sometimes you can't get a hold of somebody, or if you do, you get a different person in these larger custodians every time you call. So sometimes it could be something really simple, but it just takes you forever to get the answer. Again, that's just something to keep in mind. A lot of people like to have a live person answer the phone. And then I have a lot of clients that just love everything automated, right? So just talk to me on my email, let me go in and do everything online. And there's also companies that do that very well. And I know Equity Trust has a very robust client portal and a way for you to access information.
I think I'm still a little old school. I still like to get on the phone and ask my questions.
Yeah, I tend to be that way too.
I have
I like a
a
little more.
question for you, Roberta. I heard
Sure.
along, and I don't know if this is true or not, but I know a real estate investor. They were wanting to buy some property. They found that they can use their retirement fund moving into self-directed IRA. And as they went through
Mhm.
the whole process, at the end, they found out that the type of self-directed IRA they signed up with, they couldn't invest in the property that they were doing. And it was at the very end. And I was like, didn't you ask the
Mm,
question before? Like, how could you go through that whole process? Like, is that common? Have you come across that
mm.
often?
Unfortunately, yes. And I think that's a great example. Again, why I created Invest IRA. When I came up with the concept, it was super easy because at that point I had been educating investors, so kind of top of funnel marketing. Then I was sitting in a seat doing marketing for a smaller boutique firm, and I was closing the accounts and working individually with those investors. And then I was working for investment sponsors like a Bequest, right? And I would be raising money, and I was in the oil and gas and private equity. And what I started to see is all the disconnects like you're talking about. And that happens because investors are educated primarily through their custodian and or at an event where there's an investment sponsor and a custodian educating, which is great. But the custodian is not going to look at that investment. They're not going to ask the hard questions. Now, some salespeople might ask you, and some may not. So you're not aware of what to ask, right? So that's where, again, my services come in, and not being, someone who opens accounts. I have clients that have accounts at numerous custodians. My new clients that don't have an account yet, I can help you with that too, but I help guide you. We figure that out. I usually give people 2 to 3. We walk through it and see if it's a good fit for you. But the beauty is, I'm able to go through that investment, not only for the feasibility for the IRA, but I'm going to find out, is there anything prohibited? How is this investment secured? Are you comfortable with the investment? Did you ask all the right questions, right? That's something that technically I couldn't do when I was sitting in that seat. I was a pretty good sales girl, though, I'll tell you that. Like, I would prompt people as best I could, but I would never say, it's guaranteed. I've also seen people, again, private equity, or an unsecured loan. And sometimes they were aware of it, and they would take the retirement money and put it into an investment without it being secured. So
Wow.
I've seen it all, and I'm not surprised by what you just mentioned.
Very interesting. Anybody else have any thoughts or questions, or been through something like that similar?
Well, I would just jump in and say that's the advantage of working with someone like Roberta, because if you're working just directly with Equity Trust, formerly known as, I believe, Equity Trust bought out Midland Trust, is that correct?
Yeah, that is a little acquisition. Yep, they've been doing a lot of that.
They're bought out by Equity Trust, but in general,
Yep.
what I've heard from Midland and Equity Trust is we're really not allowed to recommend investment to you. Our job is to facilitate what you are asking, directing us to do. Whereas Roberta is in a role where she can ask deliberately good questions and help you filter what you're looking at, so you pick something that best meets your needs.
Right. That's exactly right. Thank you for mentioning that. The guidance is good to have.
Yeah, thank you. Thank you, Paul. We've got on the screen some options. I know Roberta mentioned this earlier about different things you can invest in with your self-directed IRA. And I love the alt space. And you mentioned, cryptocurrency, private equity, startup companies, and then the tangible ones, which are really interesting, like livestock and animals, and how that looks. So, you think just real estate, but the sky is really the limit on what you can do. So coming from a mindset, traditional 401k, your money's where they basically put it in stock market. And you just have to hope it goes up when it goes down. But this one, it seems like you've got a little bit more control on where you want to do. So whatever you're interested in investing, my family is big into the horses. My aunt lives in Kentucky. She was a jockey in Paris for a while. So I never would assume, like, oh man, some of these people have investing in horses through their self-directed IRA. That was pretty
Yeah,
interesting.
you're exactly right. There's some very unusual investments out there. I would say a little unusual, but here's the thing: like, if you have the horse in your IRA, you absolutely can do that. And you can own that horse. But again, you're prohibited to that investment. So no sweat equity. So you can't feed the horse, you can't comb the horse. So you've got to be in an arm's length. Anything that you're putting into that IRA is something that you're not physically working on. Another line that's good to keep in mind is desk work. You can do the desk work, but not the paperwork. I'm sorry, the desk work, but not the physical work. So that's what, I try to remind people when they're getting creative, make sure that you walk that through exactly how you're going to be involved in the investment. And that includes anybody ascending or descending in your family tree, by the way. So as far as cousins, so, going the horizontal way on the tree, that's okay. Your cousins can invest with you, but not anybody ascending or descending in the family tree. So a lot of times I give that example of real estate. You know, if you buy the house, like your child can't live in it, your grandchild can't live in it, and you can't, you know, do anything outside of the IRA itself. So you have to be tracking everything in terms of the investment. So if you hold the house, the horse, the crypto, whatever it is, 100% of any expenses related to that investment, they have to flow in and out of that IRA, as well as the returns, the income. You can't receive anything outside of the IRA. You can't pay expenses outside of the IRA for the investment that's inside of it. And it seems like we do have a lot of new people. So we've got Paul, who has an IRA self-directed for 10 years. I think there was a couple people that chimed in, or one said that they didn't have a self-directed IRA. And you might be thinking, or I'm actually wondering, you know, what prompted you to come in to this call, number one, and you can put that in the chat. And number two, one of the reasons that people are using self-directed IRAs and into probably close to the $1 trillion, probably, well, I think it's probably 3 to 4 trillion, in retirements accounts in this industry. And there's a great portion of that that's inside of self-directed IRAs. And why are they doing that? Why are they taking the money away from that advisor or getting it from that old 401k and doing something on their own? It's because of the tax advantage, right? It's huge. So you can do the investing in a traditional IRA, tax deferred, right? So you're investing inside of the IRA, all those returns are coming into the IRA, but you take a deduction on that contribution, right? And then when you're eligible at 59 and a half to take that money out without penalty, you're going to pay taxes on the way out. And that's going to be on your principal contribution plus the growth. Okay. So in the traditional, you may have, let's say you started with, you know, $50,000, and that $50,000 investment grew to $500,000. You are going to pay the taxes on the way out at 59 and a half when you're eligible without penalty. But in the year that you take that money out, it'll be added to your net ordinary income. So you're kicking the can down the road. You're going to pay the taxes later. With the Roth IRA, which has only been around since 1997, it's sounding older and older all the time, but 1997 is when it came out, the Roth IRA, big difference. So that $50,000 that we grow to $500,000 in the Roth IRA, no tax deduction on that contribution going in. Okay, so I pay the contribution, it's after tax. But if I've got a $50,000 investment in there and it grows to $500,000, that $450,000 gain, when I'm eligible at 59 and a half to take that money out without penalty, and there's no required minimum distribution, so I can take out that earnings and that gain with zero tax. So a lot of investors
The Roth, Roberta.
Yeah, that's with the Roth IRA. So no capital gains, no tax.
Can I ask a question?
Sure.
So this brings a good point. When is a good time? When should you convert a traditional into a Roth?
Great question. So that is an analysis of your tax basis, right? Your net ordinary income tax rate, and also the investments that you have, or potentially what you're looking to invest in. What I do know, I'm not an expert in conversions per se, because it does take a team. It takes CPA, it takes spreadsheets, it takes working some numbers to look at what those calculations are going to be based on the investment that you have. But what I do understand is the longer you wait, especially if you have high net worth or you have $1 million in your IRA and you're kicking that can down the road, your required minimum distributions are going to continue. It affects what you're going to pay into Medicare and Medicaid and Social Security, those distributions. So those are the calculations that you have to look at. And sometimes it's painful upfront to convert a high amount of money in an IRA. But when you do the calculation, you're going to find that you're going to save hundreds of thousands of dollars, especially if you have $1 million or more in an IRA, by doing it now. So that's something that I can connect people to, you know, some information on that too. But it's a very important thing to look at. And I also really like the Roth IRA for even like a high risk, high return, or something that, you know, maybe a startup that has, or private equity fund that maybe there's a ramp up period, but you've done your due diligence, you know that it's going to grow, or maybe there's a nice exit at the end and you feel secure and comfortable. That's a great one for the Roth IRA because you're expecting that 2x, 5x, 10x, you know, growth. So you know that that's a good place for you to put the Roth. So I know back in the day when I would do my Roth or I do a conversion, I'd be like, oh, why did I do that? You know, I got to pay taxes. And then, but I'm like, oh, wait a minute, it's over, right? Because now it's placed, it's set it and forget it. And I don't have to worry about the taxation anymore. So
Yeah.
Yeah.
Can you open straight up a Roth IRA where it's only convertible from a traditional?
I'm sorry, what was the first part of the question? Can you open?
Can you open right away a Roth IRA, or is it only a convertible version? If you have a traditional, you can roll it into a Roth, but or can you open a Roth IRA without having a traditional?
Sure. Great question. I don't have all my slides in front of me today, but there's something called the modified adjusted gross income limit. And I should take a look at that, so I'm not going to quote it. If you do not exceed the MAGI limit, modified adjusted gross income limit, you can open a Roth IRA. And the one requirement is that you have income. So W-2, 1099. And there is where you're going to max out where you won't be able to contribute or open. And that's why we always say everybody can have a Roth because you can convert in order to get there if you make too much money. But the requirement is you have to be employed.
Gotcha. So your answer is that you can open a traditional and you can open a Roth, well, only with a caveat that the Roth you have to be employed.
Correct.
Got it.
Great. Let me go to our next slide here and see what we've got here. Oh. Okay. So we covered a little bit of pain points, but I know, Roberta, you were talking about, you know, why you see, what's the commonality that you see clients coming to you for? Do you want to talk a little bit about how you support them through the process again? You know, you mentioned the
Sure.
information overload, and like I was saying earlier, like getting into an investment, I thought my self-directed IRA would be able to house, and then at the very end, it didn't, and I'm scrambling.
Right. Yeah, I think it's so important for investors to really think about the time value of money, right? And so a lot of my clients tend to be high income earners that are just really working hard at the W-2 and they want to get into real estate investing full time, for example, or they're looking to move away from that W-2 and they want to get into their own business. So they're very busy, they're very time sensitive. And while fees are important, they also know that if they get to the place of education and what we call execution, right, of the decision and the investment, they're going to be better off. That analysis paralysis for some people can last months, if not years. And it is a thing because you're just confused. And if you call 3 to 4 different custodians and you talk with an individual salesperson and ask the same questions, the identical questions, you may feel frustrated because you just got the answers in a different dialect, meaning the self-directed IRA industry has its own language and terminology, and sometimes it's interchangeable, or you've only heard it for the first time, so you're not sure if you heard it right. So that's the part where I cut all of that down and we get really clear. I spend quite a bit of time with my clients, hours, and we have a process that we go through. So remember earlier I was talking about, you know, we open the account, we fund the account, and then we direct the investment. That's the process for the custodians. Open, fund, direct. That's it. The main goal is to open and fund because now you're a client. And that's great, especially if you've been at their workshops or their events or you felt like you got enough information to execute. But if you didn't and you're acting on your own, open, funding, and directing, that third one is where you may get really hung up. And even on that second one, getting the money over, you know, in a timely fashion. So I spend a lot of time up front and we go through all of that. And so we go through the scenarios, and even some cases I'll do, depending on the package, I will be on the calls with you, with the custodian. I recently had a client going to open the solo 401k for the first time. And I said, hey, let me hop on the call with you and we'll walk right through it. Of course, I have good relationships with many custodians, and they welcome that. And they actually appreciate having somebody there that's advocating, even for the custodian a little bit, because they can't really do that. But then that way my clients are feeling more confident and moving through. So I think that's might be answering the
Yeah.
question.
No, that's great. I
Is it-
love that.
Sorry, is it fair to say, Roberta, that you're more or less a one-stop shop? So if anybody here, the majority of folks have a self-directed IRA, they would come to you and say, you know what, I'm happy, like, for example, like Paul with Equity Trust, but like, I'd like to see a comparison of what other IRA custodians could offer me better than the way I'm set up. Is that fair to say?
That is fair to say. Thanks, Lena. I kind of like that. That's one of those terms we hear. We're like one-stop shop, but actually that's really good because that's what it is. I mean, you're going to have, I'm like your central point of contact, but I will be able to help you with that opening, right? Making sure it's the right custodian. I'm going to help you with that funding to make sure that we have the terminology straight, the timing straight, the eligibility, everything, and then reviewing that investment for feasibility. And because, again, that time value of money, not everybody's a client, right? There's some people that, I've met them. There's engineers, those engineers, God bless them. They're so smart. And they'll take all that information, they'll throw it into a spreadsheet and they'll calculate something in 5 minutes. I'm like, okay, good, great, you got it. But a lot of us are not like that. So we want to be able to take all that information and then again, customize it for you and have it make sense and get you moving. And I will also say this too. Some people are very fee sensitive and other people are not. It was actually one of my very first clients. I took her through a lot and she went with the most expensive company. And the reason was she's like, well, I'm taught to go with the best. I'm taught to spend money because that's how I make money. And she loved that it was woman owned and founded. So she was like, I'm fine with it. And you know what? I felt really good because she was brand new to it and she had 3 potential investments, and I believe she executed on all of them. But I felt really good too because I knew this company so well. And I'm like, you're going to get exactly what you need. You're going to get the live person, you're going to get the service level, and you're going to get the confidence with your provider. So that's another example of just working with the client based on their needs. And then some people, if you are looking to do a single investment, I know Bequest has some great opportunities as well. I connect clients with investment opportunities, again, different, right? Back to that one-stop shop. So I help you with all that setup. And then I can also talk through and review the investments with you, whether it's a Bequest or other opportunities that I have. I walk my clients through it. So we get to talk through it and talk about it and really see if it's suitable. And then looking at those returns over time. One other thing, because I am starting, you know how it is, Rebecca, you said when you don't have slides, that's what's happening to me right now. The exit of your investment, just write down that word exit, because you've got to understand that exit. And then what are the tax consequences then? What is your expected return? What kind of fees were involved to get there?
Yeah.
And really understanding what that exit is. So
That's really good. That's really good.
All right. My just 5 cents piggybacking on Roberta's comment is that for all of you that you think you have it all set up properly, I would still encourage you very much so to take another look on at least yearly basis at your accounts, because where there is some fat on the bone, there probably is more. And I think, from a perspective, I had a client call for a pretty sizable investment with us that she was going to move forward. And then she, a couple weeks down the road, one of her, I guess, other operators, for some reason, somehow they discussed, so she cut it in half. So I went back to her and I talked to her about that. And I just wanted to understand, we're not pushy, salesy. Like, I'm all about, like, you should set up the best way that works for you. But long story short, like, whoever was that person, like, told her to split her investment in very small chunks and even go from one IRA, open up another IRA, which was very similar investments. I didn't even understand why they said that, because in my opinion, that was only extra fees and all of that stuff. So ultimately, we ended up talking through that, and I explained to her that sometimes, again, you have to look at the bottom line, that you can diversify and you should diversify, but when you start diversifying too much, you should look at the big picture, because the fees that you're paying for all of these investments, maybe it's costing you, just an annual fee with a custodian, but the transaction fees that you're not paying attention at for some of them charge it, outgoing and incoming, you're not paying attention to that. I can tell you right now that a lot of that's 1 to 2 points that you just are throwing away just because you're not looking at it. And you can call it cost of business, but I still call it that it's cost of opportunity that you're losing.
Yeah.
Yeah,
Yeah,
I agree.
that makes sense. I want to go to, I know everybody's time here, we're getting close to the end, but I want to still continue to open up for questions. But I also want to put this up there as we answer some of the last questions that anybody has is, again, we're here for education purposes only. Because we have an income diversification kit, it's free, doesn't cost you anything. You just go to bqfunds.com/free or scan the QR code. And that kind of gives you a plan. We've got a whole bunch of goodies there, like we have educational videos. We've got a SWOT analysis if you haven't done that yet. We've got an income statement. You get books. You get an option if you want to get it mailed to you or if you want digital copies. So what we always say is like your best investment is yourself, and taking time like you're doing right now and just getting educated on the process will help you be more focused on when you come to choosing an investment deal. And then if you're interested in speaking with Roberta and going through her process, Roberta, they can contact you here at that number, correct?
Yes, yes, you can
Okay.
text or call. I know some people call me crazy, but sense of urgency, not a problem with me. If I
Yeah.
don't get back to you right away, I always do, but the QR code is also a great way to set up a call and see if there's something that we might be able to do together or work together to help you get closer to tax deferred or tax-free income. So
Yeah. I love that. Does anybody have any questions before we let everybody go?
One question is, earlier you mentioned that in self-directed IRAs, you cannot have, say, rare collectibles, for example, numismatics or wines or art or.
Yep, exactly. Art and alcoholic beverages, like your wine collections, things of that nature. Yeah. But like heavy equipment, livestock, there's just so many things you can do. But as you probably know, Paul, being a self-directed IRA investor and maybe being on different events, there's a lot of taxation that can be triggered inside of an IRA when you're operating a business. So the whole wholesaling area, operating a business, leasing equipment, there are things you can do, but there's nuances and taxes related to it. Now, sophisticated investors leverage Roth a lot because, again, it's zero on the way out. So even maybe that taxation along the way, based on the return that you expect at the exit, is, sensible. But a lot of times in traditional IRAs, they're less impactful.
The IRS rationale for not allowing rare collectibles in self-directed IRAs?
The rationale? I'm not really certain of that. I think it has more to do just with your personal collection. It's kind of like that borderline of, self-dealing. It's something that is more personal. It's not arm's length. That's my guess. I don't really remember the story of it. But again, way back when IRAs were created, I believe it was 1974, they just had a couple exceptions, and that was one of them. So.
Okay, thank you.
You're welcome. I think there was a question in there I didn't see that went through.
Yeah. I mean, feel free to get off your mic if you want. I think you were asking about rental or a rental investment in self-directed IRA.
Sure. Is that Dean?
Yes, yes. I think when it comes to certain items, and I'm not sure about this, but I think it has to do with you are actually holding them, just like gold. You can't buy
Right.
gold and put it in your IRA in the same way. You can't physically take possession of bottles of wine and such. So I think it
That's
has
a
to do with that.
Yeah, that's true. Your gold, if you can hold gold in your IRA, but it has to be in the depository. It can't be in your home. I've run into people that have told me that too. They're like, "Well, I've got the gold at home." I'm like, "Ah, I didn't hear that. Don't tell me." But yeah, you can't do that. Exactly.
Does anybody else have any questions for Roberta?
I just want to say, Roberta, thank you very much. A lot of great information. Quite a few of us talk to, self-directed IRA companies all the time. And I feel like you sort of get piecemealed on information. I just want to say thank you very much. I feel like you got more of a full picture from you. So we appreciate that.
Excellent. You're welcome. Thank you. Glad to hear that it was well-rounded.
Mhm.
I definitely can go off on different topics. So it's great to be here. This is a great way for investors really to gain more information. I like your events. I was sorry I missed your one yesterday. You had a really good one. I saw the notes on it, and that was fabulous. Is that one recorded also, Rebecca?
Yes,
From
that was
yesterday?
recorded.
Yeah, I'll go
Yeah,
back and take a look at that. So
yeah, we can get that out to you. Yeah, no, and
yeah.
just to piggyback off of Sean, like I agree with this. I mean, it's always nice to have a guide going through things in life. Even if you think that you're an expert in it, it's always nice to have someone to bounce ideas off of. And I know the self-directed IRA companies are limited on what they can share. So to have you that's, non-biased on any of the companies, you can actually talk through the deals a little bit more in detail. And I believe if correct me if I'm wrong, but when we spoke, you said, you don't get any fees or kickbacks from any of these self-directed IRA companies. So it's truly
No.
educational purpose for the individual.
Actually, there's a benefit to my clients because many of the client custodians I work with, they offer, discounted fees. So when you're referred through Invest IRA, so the advantage is really to the client. And
Oh,
I
great.
decided early on I wasn't going to make money opening IRA accounts without being on the salary and, the travel. So yeah. And really, this is my passion is to assist investors because of what I have seen and even my own personal experience in investing and with IRAs and seeing the inside of, a company that raises into the hundreds of millions of dollars and then seeing how custodians operate and the sales and marketing teams operate and then seeing the investors getting kind of caught in the middle. Not that everybody gets burned because they don't. This industry would not be this large if people weren't succeeding. We are succeeding. So please don't take it in a, I'm being negative. It's a great industry. But I think for those that do have a wrong turn or have, difficulty, it can cost you a lot, So doing that work up front and building that team is definitely important.
Yeah, appreciate that. Well, if nobody has any other questions, we'll let everybody go. Roberta, I really appreciate your time. Thank you for joining us for our happy hour, and we look forward to learning more from you in the future. And everybody, take time, doesn't cost you anything. Get on that, contact Roberta and schedule some time to have a consultation with her.
And Rebecca, I know you just closed it up, but we did miss the one question. I think it was in the Q&A.
Oh,
Is
did you
Daisy
get?
still with us?
Let's see.
She just asked real quick. I can cover it real quick if you'd like.
Yeah, go right ahead.
It
Yep,
was
she's still with us.
okay. It says if I use the self-directed IRA to buy rental property and that rental income has to be deposited back to the self-directed IRA, aren't I still limited to the 7,000 or the 8,000 a year of contributions? And that is true to your traditional or Roth. That is the contribution limit, depending on your age. Age 50 and over, it's 8,000. And if so, what happens if my rental income is more than that? So that's a great question. So there's a distinction between contribution and what we call earnings or dividend, right? So your rental income is the income or the growth in your account. There's no limit on the growth in an IRA. So you could collect $500,000 in rental income, and that is not a contribution. A contribution is important, and it's something that you definitely want to leverage and contribute to your accounts every year. But your earnings or the growth, that rental income, there's no limit. So,
Okay.
great question.
Yes, it was. It disappeared on my end. I couldn't see it anymore. So
Yeah, I
I'm
went to
glad
the
you caught that.
Q&A. Yeah, I went to the Q&A. So,
Oh, good, good.
that's where I noticed it. Yeah. Oh,
Awesome.
you're
Thank
welcome,
you.
Daisy. You're welcome. Okay. Well, now I think we're closing.
Awesome. Well, I appreciate Lena. You want to wrap it up for us?
Absolutely,
Oh.
guys. And again, thanks, Roberta. We
you're
love
welcome.
hosting new folks. I think Paul has been to most of our happy hours. So it's designed to be informal. It's designed for all of us to get in here and just exchange information and set up each other as best investors and learn from each other. So we appreciate you all for coming. If you guys are interested in any, private equity investments with Bequest, feel free to reach out to Rebecca, Sean, or myself. Otherwise, thanks again for coming, and we're looking forward to seeing you next month.